Ladies and gentlemen, good day and welcome to the VISAKA Industries Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Irfan Ryan from Orient Capital. Thank you, and over to you, sir.
Thank you, Lizanne. Good afternoon, everyone. On behalf of VISAKA Industries Limited, I extend a very warm welcome to all participants on Q1 FY24 financial result discussion call. Today on the call, I have with me Mr. Vamsi Krishna, sir, Joint Managing Director, Mr. Shafiullah, sir, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck that we have uploaded on exchanges and on company's website. I would like to give a short disclaimer before we start the call. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinion, and expectation as of today. These statements are not guarantee of our future performance and involve unforeseen risks and uncertainties. With this introduction, I hand over the call to Vamsi, sir. Over to you, sir. Thank you.
Thank you so much, Irfan. A very good afternoon to everyone. I'm pleased to share with you the highlights of our Q1 FY24 performance. But before we start discussing the quarterly performance, I would like to give, with an intent of keeping our investors and analysts familiar with an update about developments in our businesses. We have had the opportunity to meet some of you at our annual general meeting and otherwise, but we are also interacting with few of you for the first time. In my mind, it would be worthwhile to dwell a bit on our company and brief you also about the products we manufacture and their applications. I trust this will be helpful to all participants. I must state that all discussions here will be within boundaries reasonably imposed by the company's strategic and competitive position. Over the last 4 decades, the company has established itself as one of the leading building construction material providers and a dependable synthetic in India. With its 13 manufacturing locations spread across the country, we have been growing our manufacturing capacities in line with the optimistic growth of India. What the government is doing on the macro infrastructure side, we are replicating at our corporate scale. The last 2 years, VISAKA has invested in new and additional manufacturing capacities of our V-Next fiber cement boards and panels and our cement roofing as well. This rapid expansion is helping us to transform the company's growth. We have reached a position where consumers are well aware of our products, our product attributes, or to make a more informed purchase. A large number of projects, including the ones like the Parliament House in New Delhi and the Surat House, which are largely talked about. In India, India is possibly the most major economic growth story that we are seeing today. It is growing fast on an expanding base, indicating a critical mass of economic expansion. The 2 most drivers of this Indian economy comprise its spending per household and increased number of households. The prospects of our company cannot be appraised in isolation. They are linked to what is transpiring in the nation. Our company's products have inevitably capitalized on this reality across all our business segments. Government's various policies to incentivize those seeking to build low-cost homes is inspiring a new tailwind in the country's housing sector from the grassroots and upwards, which is widening the housing market, especially in the rural and semi-urban India. Our products are expected to ride this reality. The need to live better underlines the fact that people will need better roofing, alternate home partitions, and sustainable construction materials and clothes, taking our business product verticals ahead. Coming to a quick review of each business segment and quarterly performance, the company has achieved a revenue of rupees 445 crores for the current quarter. The building products revenue for the quarter stands at 385 crores, and the textile turnover is at 62 crores. There is a general slowdown in the global economy with uncertainties and challenges like high commodity prices and high inflation. The demand for consumable products is very low during the present quarter across the globe. However, I would like to say that the demand for our products continue to remain good. Our roofing businesses, which is our legacy business, has done its highest volumes previous year 2022-23 and maintaining the same momentum during the current year as well. Last year, we had an increase in our capacity and commissioned a new line at our rivalry unit to meet for some of the demand and our products. The capacity utilization for Q1 FY24 stood at more than 100% for our roofing businesses. The increase in main raw material costs, that's the chrysotile fiber, has impacted the margins drastically compared to our previous years. This quarter, the prices are now looking to be stable, and we are expecting to do good volumes for the rest of the year, as the whole rural income is down at the moment. Moving to our VNext businesses, the VNext has seen a tremendous growth in terms of volume of almost 43% over the past year. Speaking about the robust demand for our products, I am pleased to inform that the capacity utilization of VNext in Q1 FY24 has stood about 85% and expect to increase in the coming quarters. VNext, with its unique advantages over the conventional products, has a huge marketplace. We remain very optimistic about the future as the product's acceptance is increasing day by day. We are glad to announce that the product, VNext, is also part of the new Parliament building as well as the Surat Browse, Diamond Browse, the world's largest office building, with a combined covering of more than 5 lakh square feet. VNext boards are an eco-friendly alternative product to plywood gypsum board, wherein the product is both fire and termite resistant. The use of our products for such constructions like the Surat Browse has helped to save over 100 trees from being felled and over 45,000 carbon emissions. In order to meet growing demand for our products, we have done a 72,000 metric ton of greenfield expansion at West Bengal, Midnapur, which is expected to be operational in September 2023. By demonstrating the capacity to absorb costs, the company's products continue to deliver a superior price-value proposition. The company showcased its resilience in terms of performance on year-on-year basis. We are optimistic about the industry as a whole, given that the building material segment is expected to grow at a pace of 8 to 12% for the next 4 to 5 years due to the various demand trends, including India's urbanization drive. The rebound in the real estate market and healthy outlook for hospitality and healthcare sectors, we expect our businesses to continue the momentum in the coming quarters. The VNext business, which has started from scratch in 2008, now would likely touch around 450 crores by the end of this year, 2024, and has informed targeting a turnover of 1,000 crores by the year 2030 with an estimated investment of around 500 crores over the years. Coming to our atom business, the solar cells embedded into the fiber cement boards, making it a composite integrated solar roof with unmatched mechanical properties. This business of ours is in line with the national goal of achieving 500 gigawatts of installed renewable energy by 2030, which includes the installation of 280 gigawatts of solar power, making our product a game changer in the industry. We have patents for atom, as some of you may already be knowing, in India, USA, and South Africa. And all three countries are great potential for our product. We have done projects for Mahindra, BPCL, Piramal, and the Rainbow Hospitals, and several others in the first quarter, which will lead us to many repetitive orders in terms of traction for the product. And we see that the outlook for this is positive in the quarters to come. Our synthetic yarn business for the current quarter has been reasonably good considering the sluggish demand in this sector. Most of the textile businesses have shown drop in turnover for the current quarter compared to previous. We were able to manage the turnover with a good price and return. The yarn produced by recycling of used PET bottles has been rapidly growing. There is great potential in the export market for this product as well. Our capacity utilization for synthetic yarn in Q1 FY24 stood at 88%. I will now discuss the Q1 FY24 financial performance. The revenues for the quarter stood at 447 crores versus 479 crores in the previous. The segment breakup, the building products revenue for Q1 FY24 stood at 385 crores against 391 crores in FY23 Q1, and EBIT of 27 crores as compared to 53 crores in the previous quarter. The synthetic yarn revenues for Q1 FY24 stood at 62 crores against 88 crores in the previous quarter. EBIT for the quarter for yarn segment stood at 8 crores compared to 12 crores in the previous quarter. The EBITDA, including other income, stood at 38 crores compared to 66 crores, resulting in a degrowth of 42% on sequential quarter compared to Q4 FY22. The EBITDA grew by 35%. The EBITDA for the current quarter, Q4 23, stood at 28 crores. There was a huge impact on the raw material input costs, mainly of the tricyclic fiber, due to the Russia and Ukraine war, due to which there has been significant drop in our margins. That stood at 12 crores as compared to 38 crores in the previous quarter, and for Q4 FY23, it stood at 5. The borrowings of the company has gross debt of 410 crores, which is considered as moderate due to aggressive expansions that we had undertaken in the recent years. The high interest and depreciation also added to decrease in profitability due to higher capex and borrowings currently. With better performance and cash flows in the coming quarters, we expect the borrowings to come down and with lesser interest costs. As the world moves forward with reducing the impact of global warming, we continue to strive towards being sustainable by leading the way across all our verticals, say the VNext business, or the Wonder Yarn business, or the solar atom, With this, open the floor for questions and answers. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Dani from Monarch Network. Please go ahead.
Yeah, thank you for the opportunity, sir, and thanks for the detailed presentation. My first question is regarding our VNEX division. We have, we've done pretty well. Just wanted to get some idea as to what kind of order book do we have and what kind of capacity utilization do you expect for the same for this year?
Yeah. So for the VNEX business, the capacity utilization so far has been around 88 to 90% in the first quarter. We are seeing that the uptake is increasing and with a new plant coming in Midnapur, we see that the overall distribution cost for the division will be better as the newer plants come in. So overall, we see the demand for the product is very, very good. We are seeing a very bullish outlook of almost around 25 to 30% in terms of growth rates in this space. I think we'll be good numbers in this division.
Sure, so that's pretty helpful. So my second question is, as you know, also we are shifting concentration away from roofing business to other segment. So just want to understand, in the next couple of years, what kind of revenue split do we see from each segment, and any capex lined up for the future? That's my question.
Absolutely. I think actually I missed to mention this point. We as a company had taken up a goal to make our legacy business to new age business in terms of revenues to equalize, and I think we'll be very happy to share that by FY25 we should see a 50-50 ratio in terms of new businesses to the legacy business. And in terms of investments, as I just shared, we are looking at VNEX division to be a good growth driver for us in terms of the product acceptance and in terms of the product deployment. So we will be having a couple of more investments in the VNEX space more seriously as the years progress. We are also looking at smaller investments in the textile space based on how the market outlay is. Investments will be majorly in the new businesses.
Sorry to interrupt, sir. Your audio is breaking up.
Hello?
Yes, we lost you in between.
I was saying that our new business revenues up to the old business, the legacy business revenues, would equate about 50-50 ratio by FY25. And going forward, our investments will be more concentrated in the VNEX businesses, the high growth rate business that we are concentrating on. And we look to double our revenues in the VNEX space over the next 5 to 7 years. That's the outlook that we are looking at in terms of growth in this space.
Sure, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Anika Mittal from Invest Analytical Advisory LLP. Please go ahead.
Hello. Good evening, sir. Thanks for the opportunity. My first question.
Ms. Mittal, may we request you to use the handset mode while speaking for optimum audio quality?
Hello. Am I audible now?
Ma'am, you're audible, but your audio is not clear.
Okay. Now it is, I think.
Ma'am, please proceed.
Hello. Thanks for the opportunity. My first question is, for our asbestos-based product, we have been badly impacted because of our reliance on Russia for the raw material. Do we have similar dependence on any other raw material which we import from any other country, or do we have multiple sourcing options to avoid such dependence?
Yeah. So if I understood correctly, you're asking about the raw material dependency on the legacy business, and if such similar dependency. No, actually, that is one of the primary reasons why we are looking to expand and invest further into the new age, new growth businesses where we don't have such dependency. Quite a few multiple sources of raw material inputs and different countries that we have those sources from. So we are fairly secured for our new age businesses in terms of inputs. Yeah.
Okay. So my second question is, post-commissioning of new Midnapur plant in the current quarter, can we expect more further inflows from export business?
Sorry, I didn't understand the second one. Can we expect?
Can we expect order inflows from export business, order inflows?
For export business of VNext, is that what? So VNext as a product has found great acceptance across the country and across the globe now. In fact, we are exporting to more than 25 to 30 countries across the world. And the demand has been slightly varying because of global impacts that are happening in various parts of the world. But the offtake in terms of VNext has been quite promising. In fact, our exports have been quite stable. We are looking at almost roughly about 25% of 30% of our production that we can cater to the export market. But it will keep varying based on better pricing structure that we get in terms of our long-term growth. So that's the reason why we are more concentrating in the Indian market.
Okay. So my last question is, does the export business have better margins, and going forward, can we expect more traction in that particular direction as our exports for board division have been 20 or 21% in the last 2 years?
So it really depends on the country to country in terms of margins, and that we are very active in terms of what and where we concentrate and what volumes we sell. I think it goes more into day-to-day operations in terms of are we getting better pricing from so-and-so country versus what we can do in India or any other country for that matter. So it's a case-to-case basis, and we try our best to maintain the market and ensure that we get the best profitability for our customers.
Thank you, sir. That's from my side. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Dhananjay Kumar Mishra from Sunidhi Securities. Please go ahead.
Hello, sir. Thanks for the opportunity, and also thank you for organizing this call. And I hope you will continue the results conference call going forward also. So my first question is that you said that we had a very good volume in VNext. So can you give what is the breakup in terms of revenue of CSC now? VNext.
Sorry to interrupt, Mr. Mishra. We are unable to hear you clearly.
What was the revenue contribution in VNext in this quarter, and what was the growth?
So I will not be able to give you a specific number in terms of the revenue contributions of VNext, but I can tell you that the growth rate has been from last year to this year, it has been around 5 to 10% for the first quarter because we've seen an overall slowdown. But going forward, we are looking back to numbers of 25 plus in terms of our growth rates for the VNext business.
Because you also said that we will be doubling in next 5 to 10 years, 5 to 7 years. Then in that case, CAGR will be just 13%. And when demand is so good, and we are also adding capacity in next in FY24, close to 72,000. So our capacity will be almost 25% more from current level. So what kind of growth you are expecting at least for this year or next year in this?
I'm sorry, I am not able to fully understand what you are saying.
Our current capacity is 2.5 lakh, and then we are adding 72,000 ton in H2 by September, right? So what kind of growth we are expecting for this particular year in business? Although the Q1 is little soft.
Understood. So like I've shared, I think year on year our growth we are looking at around 25% upwards. So that's the track that we've been having over the last 2 to 3 years also. Going forward also we see a similar rate. 25% growth year on year is what we can expect from the VNX.
And what kind of margin we are doing in VNX?
Margins, I think, have grown significantly. We can look at upwards of 15% gross. Yeah.
15% EBITDA margin on yearly basis.
Yes. Yeah.
My second question is, although in all your peers, you are saying that textile fiber prices is new normal, and now we cannot expect much decline in the paper prices. We will have to increase prices to get to our normal margin we should go in the roofing segment. So is there any possibility to increase prices maybe in Q3, Q4?
So let me, I think, make myself more clear in terms of asbestos pricing. I think if you see the industry, the history of this industry, I think every 5 to 7 years there is a spike in terms of the fiber costs over the last couple of decades, if you observe. And this time, unfortunately, it has been because of the war. And the war situation has been quite unprecedented, as we all know. And we've been waiting for that situation to settle down. But what we've been observing is because of that, the input costs have taken almost a 25% upward trend in terms of the impact of cost. And the offset that we could do in selling price was hardly about 2%, right? So it's almost 10 times in terms of costs that have gone up in spite of our selling price uptake. So that is what we are trying our best to maintain in terms of our expenses and ensure that our input costs come down and ensure that the prices go up. Having said that, the selling price increase, since we all know that this is a rural product, it has its price limitations in terms of how much we can push upwards in terms of price. We are trying our best to offset the input cost increase with various other measures. So that's been the focus right now for our company.
And lastly, about solar roofing. So how has been response for that product, and do you see that portion or that share should grow in next 1 to 2 years?
Yeah, absolutely. I think that has been one of the new initiatives by the company, and I always like to mention that it has been a very exciting journey for us to enter a new space with a new product where even the market, even the solar market has not seen such a product. And the gestation period has taken time in terms of product acceptance, in terms of product spread. And we are seeing a very positive sign in terms of getting repeat orders from the same customers that we've supplied over the past 3 years. And that is what is giving us a good boost in terms of an outlook. I think in the next couple of quarters, we should be hearing a lot more projects in terms of deployments, in terms of execution, and in terms of growth. So I would say a good idea for how the atom is driving should come within the next maybe 10 to 12 months to be realistic in terms of how well the product is taking off. But let me assure you that we are on the right track in terms of the product deployment.
Okay, that's all from my side, and hope you will do better in some coming quarters.
Thank you. Thank you.
Thank you, ladies and gentlemen. In order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. Sir, from the previous participant's question, when you are saying that our business division is expected to grow 20 to 25% over the next few years, so why are we only guiding for doubling our revenue in the next 5 to 7 years? Because it will be a lower target than what the growth we are seeing. If you could help me gain some clarity on that, it would be very helpful.
Sorry, so you're asking if we are projecting a growth of 20-25%, why is there not a faster revenue uptake? Is that what you're asking?
Yeah. So we are only guiding for 1,000 crores in FY30. So regarding that.
Yeah, so the projections are based on various market conditions, as I'm sure you all understand. And in the rate at which the product is being accepted and the way we are looking at, taking all things into consideration, we feel that this will be a good target for us in terms of where we are standing. It took us almost 10 years to reach the stage of growth that we have today. And going forward, I think we are very bullish in terms of how things are. If there is any opportunity at all in terms of speeding this up, let me assure you we will be the first to grab that in terms of market capacity. Since we've started today, we are selling almost 1 crore square feet per month. That is the deployment that is happening month on month for the product. And there is severe competition looking at us in terms of how we are performing. There are new players entering the market. In spite of all that, I feel the brand name that VNext has created in the network, in the project space and the architect space, I think this will be a good achievement in terms of the way forward. Having said that, any opportunity that we can do a better and faster job, let me assure you we'll be right there and ensure that happens. Yeah.
Okay. So this will be kind of a conservative number.
Sure.
Yeah. And so the next question would be, sir, our roofing segment.
Sorry to interrupt. Mr. Rathi, can you speak a bit louder? We are not able to.
Yeah, I'll speak a bit louder. Sir, under the roofing segment, our revenues have been similar to what we had previous year this quarter, but our margins have improved. So are you seeing some kind of improvement in the asbestos sheet segment altogether, or how is the industry performing? So if you could highlight on that.
Yeah, I think unfortunately the war's impact has been quite long. I think we were not expecting the impact to be for such a long time, but nevertheless that has been the reality. And because of that, the input cost, as I was sharing, has been on an uprise. And the company is trying various methods to offset these increases and ensure that our margins are maintained. It has been a challenge in the first quarter in terms of offtake because of various parameters and the input costs. So going forward, the focus of the company will be to ensure that we curtail our expenses and ensure that we do the best cost-benefit analysis in terms of every sale that happens. So that is the strategy for the roofing business going forward.
Okay. And so my final question would be, on our AGM, we had guided that our yarn business is a high margin segment, and we are into a specialized kind of recycled yarn, but our margins and revenues have been declining constantly. So why is that, and what is the view going forward?
Yeah, I don't agree that the margins have been decreasing constantly. It's been only quarter in terms of a margin drop that we've seen in the textile space. That is because of our overall dip. In fact, many companies have taken severe shutdowns, and there have been severe actions taken in the industry. But we have been able to maintain a basic, a smaller drop, I can say, compared to what has been happening in the industry. The outlook for textile has always been a very cyclical and a rapid uptake and rapid downtake in terms of our experience over so many years in this space. I think a good outlay for you would be that we will ensure that whenever the markets are doing well, we are getting the highest premium for the product that we make, which is the reality. And whenever there is a downtrend, we are the least impacted compared to the competitors in this space, given that we are in that niche. I trust this answers your question.
Thank you, sir. That was helpful. And my final question would be, when do we see both our segments going into a steady state, and some kind of guideline on what could be our revenue for maybe next 1 or 2 years and margins as well?
Yeah, I think definitely the new businesses are in a comfortable position in terms of takeoff, like I've shared and reiterated. The margins are improving for VNext as well. Last couple of years, we added 2 new plants, and this year we'll be adding another plant. And we are looking at further expansions in this space given the rapid acceptance and growth in the product. So the margins also are improving year by year, or rather quarter by quarter for the VNext division. So overall, I think the company's growth will be in track, driven by the VNext space. That's what we are looking at, supported with the solar and the textile business. So that is what the general outtake is. The roofing business we will see to be a more stable addition in terms of our turnover. We should be able to maintain our costs and our expenses to have steady margins in that space will be a good outlook for that. Thank you.
So just if you could give a timeline when you see...
Sorry to interrupt, Mr. Rathi, may we request that you return to the question queue?
Just a final question. So just like from a previous question...
Sorry to interrupt, Mr. Rathi. Participants are waiting for their turn.
Sure, I'll get back in.
Thank you. The next question is from the line of Sanchita Sood from Robo Capital. Please go ahead.
Yes. Good evening, sir. What I wanted to ask was regarding the cryotile fiber prices. What are they currently, and as compared to, say, FY23, by what percentage have they gone up? And another question is that when can we expect the overall margins to, resume to, say, FY22 or FY21 levels? Like, when can we expect them to come back to those levels again?
Sure. So in terms of fiber costs, actually the fiber costs have gone up by almost 22 to 25% in terms of last year what we've seen. And we've been able to offset hardly 2% in terms of increasing our selling price for that space. Looking at the way things are moving, I think based on the input that our suppliers have been sharing with us, as the war situation settles down, I think we will see a normalization of the prices in terms of stabilizing or reducing from the current levels. Having said that, the company's effort has been constantly to be I can't say independent as there is dependency on this raw material for making the product, but we are severely trying to come up with how best we can reduce the cost by offsetting different expenses that we undergo.
Okay, all right, sir. And
yeah.
Finally, I just wanted to ask, what would be your outlook on the debt levels for the next 2 years?
I think the debt levels should be coming down if we are not taking any further expansions in terms of new projects. Actually, the interest cost and the depreciation account has impacted us in terms of the overall numbers, but we are seeing a positive outlay in terms of our cash flows from the new businesses that we are having. Again, I think the debt will definitely come down in terms of overall outlook. Having said that, once we look at further expansions on new age businesses like Phoenix, we might see a similar line, but it's not a reduction. That's the general outlook.
All right. Thank you, sir.
Thank you. The next question is from the line of Chirag Wakaria from Budrani Finance. Please go ahead.
Good evening, sir. Hello.
Hello.
Yeah, am I audible, sir?
Yeah, please go ahead.
Sir, just want to get a sense for FY24, what margins do you expect for the roofing business, and going ahead, where do you see this?
So margins will be definitely under pressure because of raw material pricing. So based on achieved in Q1, I think definitely with the measures that we are taking in terms of reducing our expenses, we'll be definitely slightly better than what we've experienced. But I wouldn't show a highly bullish picture in terms of the roofing business in terms of the pressure that we are in.
Okay, and sir, for the yarn, you said you were specifying about the margin. What range do you see margins in good times and in bad times, sir?
So for margins in yarn business have been pretty steady. In fact, 15% upwards has been what we've been observing in the yarn space. And I think there's been about 2 to 3% drop in Q1 compared to the previous quarters. But some years we've even seen about 18% upwards. So we will say that the yarn business should give in good revenues and turnover based on the market situation. I think the outlook is that in another 6 to 8 months there will be a stability in terms of overall textile industry. So yeah.
Okay, and sir, in the roofing segment, sir, in terms of growth and demand, sir, what's your outlook, sir? How is it shaping out?
I think the roofing has been an interesting space since the last couple of years in terms of demand being there in the rural markets. So as you all know, the Indian market is evolving almost every year. And our journey in this roofing space is to capture the rural market, right? People who are moving from thatched roofing to cement roofing is the market space that we cater to. And over the years, if you talk about VISAKA being in the market for 40 years, the market has shifted from south to west to east to now north. So north and east are the primary markets where the demand is coming from for the overall roofing space. And that's the reason why we wanted to increase our capacity in the north to cater to this demand. I think overall, as an industry, I think the numbers may be equal, maybe around 3 to 5% growth we can observe on a good time. But it is more about how best we can cater to the growing markets in the rural space. That is what the focus of the company should be, and to reduce expenses to offset these input costs that we have seen.
Okay, sir. Any capex plan for next 2 years?
We have some planned for the VNext business that we will be sharing soon in the time comes. But and the textiles we have already shared in last quarter also, that we will be taking up some investment to expand in the textile business. Nothing for the roofing space for now.
Okay, thank you, sir.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. So if you could just talk about the pricing trends we are witnessing in the roofing segment. So generally what we see is that in Q2, the industry takes price cuts of around 3 to 5% as compared to Q1. So are we witnessing similar trends this year as well?
Yeah, so we are trying our best not to get a dip in Q2 in terms of pricing, given the pressure for us. So we are trying our best to ensure that we do maintain the market with the price in terms of what we are experiencing. So I think to be very fair and open in this space, this Q2 will be a challenge to ensure that the prices don't fall from the Q1.
So have we taken any price cuts in Q2 for the roofing segment?
No, not at the moment.
Okay. And so if you could just talk about the capacity addition in roofing segment, are the other players in the industry increasing capacities, and what impact would it have, if any, on the pricing?
Yeah, I think I'm hearing that one of our competitors is trying to do some expansion for the roofing space. But I think we are concentrating heavily on increasing and capturing our rural network. VISAKA's strength has always been to highlight and capture new markets. I think that has been a strength for us since beginning, where we hire new dealers and expand new markets. So I think we will be, I wouldn't say totally unaffected, but we will still be in a comfortable position even though competition comes, as our strategy is to constantly capture the growth markets. So that is what our take would be on that.
Got it. So which is the geography where the capacity is coming, and what would be the size of that capacity? Any idea?
I think you will have to check with the competitors. I will not be able to comment on that.
Got it, sir. And sir, I have a question on the VNext segment. So if the total raw material cost is 100, which are the major raw materials that would constitute this in the VNext segment?
Sorry, can you repeat that, please?
If the total raw material cost in the VNext segment is 100, so which are the major raw materials which would constitute that?
Raw materials, please. Yeah, so the major raw material for that would be, I think, pulp costs that we incur for VNext space. But it is not as similar to what we experience in terms of fiber, because the quantity is much lower and supplies also are plenty in that space. So I think we are in a comfortable situation in that.
Got it. And so, is the distribution for the VNext segment and roofing business similar?
Distribution for VNext and roofing is, I think the similar quantum is hardly 10 to 20%, not much. We have deployed a completely new network. In fact, VNext business is more of an urban dealer, urban metros is what we cater to in terms of our products. And roofing segment is more of a rural market. So it's more of a tier 2, tier 3 belt. So just to give you an idea, we have almost about 10,000 selling points for the roofing segment across the country in the rural space. And for the VNEX space, we've reached about 3,500 selling points in the major metros across the country that we operate. So that is the, just to give you a rough outlay on terms of where we stand. And just to add to that, we sell through the gypsum network that we established in the country. We sell almost about 65% of VNEX through gypsum outlets and 20% through plywood outlets as well. But just an idea for you in terms of where the growth.
Got it, sir. So which would be the competing materials for our VNEX segment? Would MDF and plywood be the competing materials for the VNEX segment?
Actually, not plywood. It would be not MDF. It would be plywood and gypsum board. So for the drywall partitions where plywood is being used traditionally, VNEX has substituted them. And for the fall ceiling applications where gypsum is used at large, VNEX is substituting that. So these are the main pockets where we cater to.
And what kind of benefits?
Sorry to interrupt, Mr. Aditya. May we request that you return to the question queue? There are participants waiting for their turn.
Sure, thank you.
Thank you, sir. The next question is on the line of Jasdeep Palia from Clock 9. Please go ahead.
Hi, sir. Thanks for taking my question. So what kind of EBITDA margins have you been able to achieve in the VNEX business? What has been the trend last 2 to 5 years?
So we've been growing constantly in the VNEX space. So right from the last couple of years, we've seen margins go up right from 8% to 10, 12, and now we're doing upwards of 14%. So we are around 15% mark in the VNEX.
Got it. And sir, these margins are now sustainable, or with increasing scale, there's potential to increase the margins further?
Surely, yeah.
So there's potential to increase margins?
Yes.
Got it. And what do you think the ideal margins would be in the long term?
I think that will be hard to comment because the market is still expanding so drastically, and plywood guys have also activated themselves in terms of protecting their market. But I can give you an idea that, it's been a positive trend from where we are standing. Yeah.
Got it. And so you mentioned some new competitors have entered this space. Can you name these companies?
Not new competitors. The existing competitors themselves are becoming more active as we have been growing. They are also trying to expand. So that is what I wanted to cover.
Got it. So I understand you have around 32% market share in this business. Which are the second and third largest companies, and what kind of market share do they have?
I think the second and third will be much behind us because I think right now we are far ahead in terms of installed capacity as well, and I've been adding capacities like I shared. Midnapur also will be opening up next month. I think don't want to comment much on the competitors, but I can share that there's quite a good gap between us and the second player as well in terms of installed capacity and sales as well.
Got it, sir. Thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Satish Kumar, an individual investor. Please go ahead.
Hello, sir.
Hello.
Sorry to interrupt, Mr. Kumar. May we request you to speak a bit louder? We're not able to hear you.
Yeah. So, hello, sir. So, is it better now?
Yeah. Please go ahead.
Okay. So, in Atom segment, when we reach 660 megawatt full utilization, what revenue we can expect, sir?
So, in Atom, if we do about 30 megawatt, we'll be seeing anywhere between 85 to 90 crores in terms of revenue, and 60 would be double of that, around 170 to 180.
Okay. So last quarter we released some pledge. So what is the remaining pledge percentage, sir?
I think that I'll ask my CFO to take that up. Mr. Shafi, can you please comment on that?
Hello? Hello? Yeah, able to listen?
Yeah,
sir. So 5.8% still pledge is there. On the promoter share, it is 57% of one promoter. I think it will be released shortly. So last time you have seen that release. Again, we are trying to release further also. The promoters are trying to release. It will not be more than that. It will be hardly anything. About 5 to 6% pledge is there.
Okay. So last question. So what is the asset to turnover ratio we expect from new West Bengal plants?
It's 1:1. The investment is around 80 to 100 crores, and we should be getting around that same for terms of revenue.
Okay. So on continuing, so in Hyderabad, I think we are investing around 75 crores for land. So any plan we have in mind for that land?
Actually, we've been wanting to expand in terms of our setup and get into R&D for that as well. And that's the reason why we got into that space. We have plans to make good utility for that. We will share the details on that very shortly.
Okay. Thank you. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Mukesh Panjwani from WC Securities. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yeah.
Yes, sir. Our VNext division has been performing very well in the past, and it's expected to do very well in the future too. Despite the fact we see that market is not giving good valuations to the entire VISAKA industry. So wouldn't it be a good strategy to demerge this VNext division so that it can unlock the value for shareholders?
Sure. I think we've been discussing that topic internally as well. I think we will get back to you on the right decision that we end up taking on that space. But point noted, I think it's a valid suggestion. We will discuss on that end with us. Yeah.
Okay, sir. That's all from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
So thank you everyone for joining us. I think we had a good exchange of thoughts and information. I can assure you all that the company will continue to seek to play its strengths and ensure that we are doing strong and performing with all our business segments across the country and across each vertical, like the roofing, the boards, the textiles, and the solar businesses. We are optimistic of ensuring that we capture the growth attractively and profitably, enhancing value for all our stakeholders. I hope we have been able to answer all your queries. If you require any further details, please do contact us or Orient Capital, our investor relations partner. We'll be very happy to have it sit down and go into further depth. Thank you all. Have a good day.
One clarification, sir. These pledge shares are about 15.68%.
Okay.
Yeah. Okay.
Thank you. Thank you, everybody.
Bye.
Thank you, members of the management team. Ladies and gentlemen, on behalf of VISAKA Industries Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.